Hey everyone, this is Antonio the 13th here, back with another small investment account update. So as you can see, the month of May was a pretty good one for me anyways, and it probably was for you as well, as long as you're not a bear. So for my portfolio, which was about 14 grand approximately, I was using some margin, equaling to about 20 grand with margin accounted for. Um, So on that size of a portfolio, I realized 2 grand in profits throughout the month of May. $1,615 of which was capital gains, and $458 was premium collected. Now, in order to realize the capital gains, obviously I got assigned, and if you've been following the channel, you know that I've been in AMD and NVDA, and yeah, these were the positions that I ended up, being assigned on and getting out of. I spent a good chunk of May, when I wasn't, with family, trying to evaluate what positions I should be entering into next. So there was probably some more premium that I could have gotten that I missed out on, but still, I think this was a really good month. And hopefully, other months will be similar to this. I don't expect them to be, but hopefully, they will. But yeah, as I mentioned, I spent a good chunk of May trying to evaluate what I should do next, and I ended up selling cash secured puts on Kraft Heinz and Intel. And I also ended up buying, and nothing changed in my plug position, I think. I still have 200 shares of that. So it's a very small part of my portfolio. But I did add Target, but I'll go over that in the new positions part of the video. So let's just quickly go over the details of the AMD and NVIDIA positions over their lifetimes. So for my NVIDIA position, which I started on March 31st, I had 2 rounds of share purchases, it says here, but they totaled to 100 shares. So it's not like I bought 2 rounds of 100 shares. It was just 2 purchases that totaled to 100 shares. And the value of, or the total of both of those purchases was $10,969. And this position only lasted a couple months before I got assigned. I collected approximately $429 in premium during these 2 months and collected $1,030 in capital gains. And I ended up making $1,459, or 13% of the initial investment, on this position in only 2 months, which, considering that the average yearly return of the S&P 500, as I just mentioned, over an entire year is like 10%. Getting 13% in 2 months, I think, is a win. Obviously, it's not going to make me rich or anything like that, but still, this is a solid win, and this is definitely something to appreciate. So I ended up, how I ended up getting out of this position is I sold the covered call, obviously. I think it was the $120 strike. And it ended up being the week that Trump announced that he was going to, basically give a break to China on these tariffs. I think that was the week that I got assigned on, and the stock market, not just NVIDIA, but the stock market generally just rallied hard. And yeah, my call got deep in the money, and it just, yeah, it wasn't worth it to roll out, in my opinion. So yeah, I lost out on some upside thinking about it. I don't know what I could have done differently to try and collect that upside unless, I just knew beforehand that, the market was going to rally, or if perhaps I could have gotten some of that upside had I sold or bought, excuse me, a call along with the call that I had sold to turn it into a spread. So that way I could, you know, um, collect premium and capture a little upside. But yeah, how successful that would be, I don't know. I haven't tried it, and I haven't seen. I've seen spreads online on YouTube used more as like premium collecting tools of um, speculation rather than an instrument trying to capture some upside to a short position. So I might try it one day, we'll see, but that's the only other way that I could think of that I could have captured some upside. If you have any ideas on what you do with your positions to capture some upside in these circumstances, please let me know in the comments. So now let's go to AMD, which was a very similar position and funded by mostly margin. I entered this position with just a purchase. I didn't assign it wasn't the result of an assignment on a cash secured put. I just bought the shares outright on April 2nd with a purchase price of $10,114. So the lifetime of this was also $272, the lifetime of this was also 2 months. I collected $272 in premium on this, and I walked away with $585 in capital gains for a total of $857 in profit, or 8% of the initial position, which this is also a pretty good win. However, I'm also a little more salty on this one because I missed a lot more upside on this. On the week that I got assigned, I think AMD got into the 120s, and my covered call strike was at 107. So yeah, I was very salty about this one when I got assigned, but still, a profit is a profit. Take your wins where you can, I guess, is how I got to look at it. I'll continue thinking and looking on this to see if there's a reasonable way of trying to capture upside without sacrificing too much premium in the process. So let's go into a few more details about my next positions. And I'll show you these in Robinhood, of course. But with these positions, I'm going to try to stay out of margin. I know I was using them in, the last positions I had, obviously, especially with AMD, like probably half of the capital of my AMD position, roughly, was probably margin. And I did that because it was a really good opportunity at the time. And yeah, just stuff was on sale from that April drop. But we're no longer in that position, right? Things aren't on as big of a discount as they were in April, like AMD and NVDA. Both of those are considerably, well, NVIDIA is considerably higher than it was. AMD's kind of starting to get, come back down a little, but it's still not at a really great price, in my opinion. Something to where I feel the need to get in on it and risk using margin for it. So, yeah, maybe if we have another dip like we did in April, hopefully not, but if we do, maybe then I will consider getting into some, excuse me, getting into some margin to get into a position that I really want again. That's a little beyond the capabilities of my small account, But for right now, with things as high as they are, I'm going to try to stick to the cash that I have in my account and not go outside that. So my next positions that I entered into here, excuse me, sorry. These next positions are based on, I tried to look at these a little more fundamentally than my last two positions. The last two positions I got into because they were just on a really great price and I just wanted to get in on them. On these ones, I looked a little more at the technicals and fundamentals. So on Kraft specifically, which is a stock that I've followed for years, at the time that I sold my cash secured put on this, or that I sold my cash secured puts on this, the stock was close to being oversold on the RSI. So that was a point in favor of that move, in my opinion. On a forward PE basis, the $26 strike, which is what I got the cash secured puts at, would be at 10.1 with a 2.57 EPS estimate for 2025. So basically at $26, which, you know, that's just the technical cost basis. That's not even like considering, you know, the premium that I brought in on that. Including the premium, my adjusted cost basis would be around $25.50 or 40 cents ish. So I would be getting an even better deal on this. I mean, just slightly, of course. You know, it's not a super better deal, but still, you know, every cent helps. And at a 10 price to earnings ratio, when the other competitors in the field that Kraft deals with have higher PEs, I personally think this is a great deal. This has been oversold too much, in my opinion. It's got a really nice dividend, so holding it is going to be, you know, I'm totally just fine with. However, there are some concerns with Kraft. There's a reason it's been getting sold off. The revenues haven't been that great. It's kind of been just flat for the most part, not too much growth. And the company has, you know, like I just mentioned, a really great dividend, but it's coming at the expense of the company, like significantly. It has a very high dividend payout ratio of 72%. So instead of using their, you know, profits, Kraft, to, you know, become more competitive or make the changes that they need to make to their food products to be in better alignment with the upcoming health regulations that are being pushed down by the new administration, right? Instead of having the money for those sorts of things, most of the money is going out to shareholders in this dividend. So that's a little concerning. And I think from what I've seen online, payout ratios of over 50% are generally kind of a red flag. So yeah, there are reasons that this might not be a good purchase, and why, you know, if you're viewing this and you're thinking, oh, you know, I had my eye on this and, you know, I decided not to go with it because I didn't think it was a good stock, I could totally understand why you would think that. And of course, none of this is financial advice. These are just my opinions. But yeah, I think, in my opinion, at least on a short-term trade basis, this has been oversold. $26 is a good price, seemingly, based on a forward PE basis. And yeah, I'm willing to take the risk on it. So that's why I got into, or I haven't gotten into it yet. I sold the cash secured puts. We'll see if I get assigned. Right now, the stock has started going up after I sold these puts, so currently I could buy them back for a profit, but I'm just going to keep them. In case you didn't notice, it was like my first slide. I mentioned all of these options that I'm talking about here that I've sold are on the June 27th expiration date. So I've sold everything out instead of on weeklies like I had been doing. I used monthlies this month. Well, technically it's not on the monthly chain, but it was out 30 days from where I sold these, from when I sold these options. So that's what I mean by monthlies. And yeah, so let's move on to Intel here. I sold one cash secured put here at the $20 strike. For Intel, I think there could be an opportunity for a play here. Technically, it's kind of been in a range between $18 and $22 for the past few months, it seems like. And before that, it just got really sold a lot. But there was a reason they got sold a lot. The fundamentals for this company are not super solid at all, that's for sure. So this is a real technical play here that I'm trying to play off of, just being in this range. And it could really come back to bite me. But even if I do get assigned and the stock just tanks afterwards and I end up holding this position for years or something, I'm okay with that. I think Intel has an opportunity with the new management that has come in recently to they're kind of in an underdog position, at least in terms of consumer grade processors. AMD is kind of the dominator in that right now. And in terms of GPUs, which Intel has started getting into, both AMD and mostly NVIDIA are the dominators there, right? So Intel is in a real underdog position here compared to both of those. However, NVIDIA is kind of, this is pure speculation, but NVIDIA, I think, is getting a little cocky being in their top dog position as, as firmly as they have been. And with their 50 series release, there's been some drama about that kind of just indicates to me that the company might just be they might be getting that high and mighty attitude that Intel kind of had when AMD was up and rising, so to speak, or that precipitated AMD's rise. And so I think this potential attitude on AMD's side, or sorry, NVIDIA's side, could lead to an opportunity for AMD, which based on this, you're probably wondering, well, why don't you get into AMD? Well, I don't really have the account sizing for it right now. AMD is currently around $110 a share. I had bought it originally around shortly above 100. So, but I bought it on margin, and I'm trying to stay away from that this time. So, yeah. So this is my alternative to AMD here. Intel could start making a little more ground on where it compared to where it's at currently in the CPU space. And also potentially in the GPU space. I've heard some surprisingly good things about Intel's GPUs. Now, don't get me wrong, I'm not saying that they're I'm not saying I've heard stellar things about them, but I've heard surprisingly good things. When I first heard Intel was releasing GPUs, I just assumed that they were probably junk. But um, from I've seen some surprising reviews about Intel's GPUs. So perhaps one day Intel could be in a position to at least take a little market share from AMD and NVIDIA. And if they even just took a little market share, this stock could um, it could definitely at least take back this $20-ish position that I'm selling this call at if the stock, really tanks for some reason. So this is definitely more of a speculative play, I admit, but um, it's one that I'm getting into nonetheless. It's more within my budget, so to speak, than AMD at the moment. So yeah, so there's Intel and Target. Now you're probably like, well, you were just talking about $100 stock that's out of your budget, but yet now you're talking about Target here. Well, in my opinion, I think Target, at least on a short-term basis, could be a better opportunity than AMD. Like I said, short-term basis. Um, so that's why I chose to use, the money that I have for $100 stock play here on Target rather than AMD. So why do I think Target is such a good opportunity? We're at a strong technical level on Target currently, which is trading around 95-ish dollars. And we're trading at levels that, we haven't been at since, I think, COVID, if I recall off the top of my head. I can pop into Robinhood Legend here to take a look and show you that here in a minute. But we're at a strong technical level. And in an industry with, some very big competitors with high PEs, Target has a very attractive forward PE of around $13 at the strike that I bought my stocks at. And this is another one of those scenarios where I just bought the stocks outright rather than selling a cash secured put. I just wanted the shares at this price, so I just bought them. So, and of course, Target is, just on a fundamental business basis. Of course, you assuming you're an American, you know Target, right? They're a strong retailer, right? They're not the strongest by any means, but they're a strong retailer, right? This is probably not a company that's going to be going out of business tomorrow. Now, knock on wood, hopefully they don't, but probably, like, compared to the other things that I could be throwing my money into, Target is a pretty solid bet, and in my opinion, and it is at an attractive PE, in my opinion. So that's why I bought it, and I plan on wheeling this on a short-term basis here. This is not something I plan on staying into too long, but if I do end up having to hold this position for the long run, then so be it. I'm fine with this. Target is a well-established company, and as long as nothing, fundamentally changes with that, I will be comfortable holding them. So I sold a covered call for the $100 strike, again on the June 27th expiration. And with all of these positions here that I've mentioned, I collected about $300 to $400 in premium And this is probably the extent of what I will do in June because I've only got 16 grand in my account, and all of these options that I've talked about here take up all of my buying power. So, um, yeah, there's not really much more for me to do here. So, yeah, let's take a look at Target real quick before I end this video. And I'll just, yeah, show you the account here, 16 grand. Um, it was 14 grand a few, during the April dip and all that. Well, it got below that, but it was 14 grand, without any, losses or gains factored into it. And, obviously after the 2 grand gain, I'm up to 16 grand here. So this has been the unrealized performance over the past month here for May, as you can see. And yeah, let's just take a look real quick here at Robinhood Legend. So I'm just going to show you the technical level that I was talking about on Target, just to show you that I'm not full of it. So here's Target, and here's that, $90 to $95 range that I was talking about. So if I scroll out here and we go back to, here's that COVID low here. That I was just talking about. So yeah, between that $90 to $95 range here was where we dropped to. Now, if we go back down below that, it is likely that we're probably going to go down to this $80 level here, which I think looks to be the next area of support there, 81-ish dollars. So hopefully it doesn't go down there, but if it does, like I said, I'm willing to hold. Again, good company, and it's been oversold quite a bit. So we'll see what happens. I'll definitely keep you updated. And I'm going to be doing these videos. I used to do them weekly, and then I had some family coming in May, as I mentioned in my last update video. So I didn't get to do weekly videos like I had. I think I'm going to continue with the monthly upload going forward. I don't really have the size of account to just be constantly doing trades and things like that. So, yeah, I will probably just be doing monthly uploads going forward for the foreseeable future until my account's a little bigger and I've got more plays going on simultaneously, or I'm doing multiple plays throughout the month rather than just selling a bunch of options at the end or beginning of a month and then letting them play out throughout the entire month, as I am planning to do this month and as I am planning to do going forward until I get into a larger account size. So one last note here, $100 of this balance here was deposited this month, so I did not mention that in my notes or in my presentation there. So just an FYI, I did deposit $100. This is my main investment account, so I'm just, yeah, this is something that I'm putting money into regularly to help it continue to grow. So as I'm sure you do with your own main investment account. So yeah, that's it. Thank you for watching. I will update you at the end of June or beginning of July with how June goes. So thanks for watching, and I hope you'll have a good June in the stock market.